Hey, what is up, guys, and welcome back to the channel. So if you're new here, go ahead, hit the like button, hit the subscribe button, and let's get right into this video. So this video is going to cover why I sold a lot of my Tesla stock, what I think is going to happen with Tesla, and some other picks you could possibly put in your portfolio to replace Tesla for now. And once again, this is just my opinion. You don't have to follow what I do, but I am telling you what I am doing and the reason why I'm doing so, because we're going to talk about a few things and a few concerns I have with Tesla since these previous two run-ups. And then we're going to really dive into some details around Tesla and what I think is going to happen. And then, as I said, I'm going to give you guys a couple little alternative stocks at the moment that I'm going to be allocating my money in, at least for now. So, all right, let's talk about this. All right, let's talk about this. Tesla. Sitting at $626 right now. Okay, I went ahead and I did a small trade this morning, but we're going to go ahead and we're going to look back at all the recent runs that Tesla's had. Okay, normally it eventually hits a peak at about 40 to about a 40%, 30 to 40% run. Sometimes it'll even go up 50%. But normally it hits a wall where it just stops going up and kind of the money runs out, the hype runs out. The hype, in my opinion, is starting to run out. Okay. Now there might be a little bit of time yet where you'll see this stock move, where you'll see it go up, where you'll see that was actually really weird. Did that actually happen? No, it was just my mouse moving for some reason. So you'll have these weird push-ups by Tesla, but then after these weird push-ups, one thing you're really going to notice is that afterwards it'll dive. Okay, and I think we are in for a dive on Tesla. I believe Tesla, after it hits the S&P 500, it's going to dive back down, and it wouldn't surprise me for it to be at like a 550 level or a 520 level or a 515 level. And for that reason, right now, I don't see any growth happening with Tesla for the next couple weeks. And I went ahead and pulled my position. And it could be a mistake. You could call me an idiot. But at this point, I think we are well above where I would consider to be a somewhat fair evaluation. A fair evaluation, in my opinion, for Tesla is around $500. So right now it is 25% higher than what I would like personally, or what I'm comfortable in buying or holding, to be honest. And I pulled my position. It makes sense to me. All right. And if you look back at this, I think we're going to come down to probably this 520, 530, 550 level. Because as I said before, this stock has not really done anything in the past several months. And let's talk about this. In the past several months, we had a stock split. This was the stock split. Okay. After the stock split, understand there was no intrinsic value added here. Nothing was added here. The company didn't report, hey, we're doing better. The company didn't report that, hey, EPS is up through here. The company didn't report anything through here up until like here somewhere. I believe it might have been in here somewhere. But you know what I mean? The earnings didn't prove that they were super strong. Last year, earnings in quarter three were very similar to quarter four. Quarter four was just slightly higher. I do believe that we're probably going to see about a similar scenario again. I don't believe you're going to see earnings beat expectations, and I think you're going to have a lot of people let down. And we're going to talk about why I think that's going to happen. But let's jump back into it here. So let's look at their EPS from last year. And I'm going to break this down, guys, in depth where it actually makes sense to most of you guys. Now, EPS, if you're not familiar, it's just the earnings per share that they went ahead and recorded. Okay. Now, last year, if you notice, their EPS was very similar. Okay. Very similar in both quarters. Okay. Now we have this quarter where we ramped up a little bit. And of course, we, obviously here we had another pretty good return, But what I want you to note here is that last year it was very similar scenarios for uh, quarter four and quarter three. Okay. They were very, very similar. So what I think is going to happen, and I could be wrong, okay, when you look at it, 93, 98, okay, I believe that we're going to see the same exact thing happen again. I think that the quarters are going to be very, very similar. I don't think you're going to see a ton of growth in this quarter. And I think that almost for a fact, people are going to be let down by this. Analysts have been lowering their price targets over and over and over, left and right, and I believe it's because they kind of have the inside scoop, and we're going to talk about that here in just a second. But I do believe the EPS is going to be very similar in these next two quarters as it was the previous quarter, and I believe when people see that Tesla didn't grow as much as they wanted to, everybody's going to be disappointed. And they're still a fantastic company. They're still a great company. It does not, I would never bet money against Tesla. Don't get me wrong. I would never bet money against Elon Musk in any bet ever. But this is the one time where I think we've hit a valuation that has gotten a little out of control. And rightly so. They got induced into the S&P 500, but they got inducted. But let's talk about this. Normally, when stocks get put into the S&P 500, what happens immediately after is they skyrocket as soon as it's announced. But as soon as it gets put in, normally the stock loses 100% of the gains that it gained from that hype. Okay, meaning there is a very good chance that, assuming EPS is exactly the same, which I think is going to be very, very similar, if not a little bit weaker, just because the economy is not there at the moment. I think that we're going to see most of those gains be lost. Okay, and especially when people see that, hey, Tesla didn't grow this quarter. Tesla didn't do this quarter, and it's not their fault. You got to understand, it's not their fault. The economy is tough right now, and not everybody has the money to just go out and buy a brand new car right now. That's just a fact. All right. So I do believe that we're going to see a pullback in Tesla. I'm almost positive of it. Do I know if it's going to be massive? I don't know, guys. I don't know how big it's going to be. I don't know how people are going to react to this. I can just tell you what I'm seeing with my own eyes. Let's talk about another email that was leaked, that Elon Musk leaked in an email Tuesday to all 48,000 Tesla employees. Elon asked for their help in reducing costs, warning that the company's stock price could plummet if that didn't happen. Let me explain. So, for instance, if certain EPSs aren't hit, and we're not hitting the expected EPS for the company or for that quarter, normally stocks end up getting hit pretty hard that day. Now, I'm going to explain why this is bad for Tesla. I just told you that I believe we're going to miss earnings. I believe that it's going to be a little bit lower than what people are expecting. Maybe not much, but I believe it's going to be a little bit lower because the economy is not strong right now. On top of it not being strong right now, we just had like a 50% run or a 40% run on Tesla, right? So now we have this 40% run on Tesla where zero value is added because it has not actually grown in the last quarter, right? Maybe we even shrunk a little bit in the last quarter, and it's rightfully so. It's a tough economy at the moment, right? Now, I believe Tesla long term is still going to the moon. I still believe, when he says he's going to send people to Mars, I wouldn't doubt it, but I do believe that right now we are slightly overvalued. I do believe that there's a lot of hype around this EV tech industry. If you don't believe me, look at NIO. Okay, a company that's selling like 60,000 vehicles a year, right? They're doing like 5,000 a month, right? Delivering 5,000 a month. That's if that's actually true. We don't know that because Chinese companies can hide their earnings. They can hide their revenues. They can hide what is coming into their company purposely just to go ahead and throw off the books. Look at, I believe it was some coffee company last year, a Luckin Coffee Company, and they completely just absolutely swayed the books so that it looked like they were the new Starbucks. They were going to be the new Dunkin' Donuts of China, and found out that everything was false. Everything. Now, I'm not saying that's going to be the case for Tesla. I'm not saying that's going to be the case for NIO. But I'm saying this for a fact that NIO is very, very questionable at the moment. Okay. And if you don't believe that this industry is inflated at the moment, let's go ahead and let's look up fuel cell. Okay. This is a related company to the EV space. All right. Let's look at the past month. 222%. No, it's not inflated, guys. There's no 220% a month. That's normal when you haven't reported anything, any earnings or anything notable. There was nothing reported, guys. They didn't add any value to the company at all. Like nothing was added to the company here, yet it soared 222% for no reason. Okay. This is a related company. This is basically for battery technology. XPeng. You probably don't even know what XPeng is. Okay. XPeng is an EV company if you're not familiar. Oh yeah, 141% over 3 months. That's about right. Sounds about normal. Just, a quick 141% from a company that a couple months ago wasn't even heard of. You probably didn't even know about. I can tell you I didn't know about it. So this industry is inflated as like out of control at the moment. And if you look at some of these other companies like Ford, like GM, like maybe they're not growth giants, and I don't ever expect them to be growth giants. But if you think that they're going to roll over and just play dead in this EV space, you're wrong. I do believe that they're going to go ahead and they're going to launch their own vehicles. I do believe that they're going to get some market share. I don't believe they're going to get all of it. I believe Tesla's still going to get the majority of it. But if you think these other players like XPeng and NIO are just going to come in and dominate, I think you're wrong. I think you're mistaken. I think Tesla is going to be the one who dominates this industry. I think they're going to have 50% or more of the market share of electric vehicles. And I believe that Ford, GM, and all the other companies are going to take up another large chunk, maybe 30–40% of the rest of the market share. And then you're going to have these weird Chinese companies like XPeng and NIO take up like the last 20%. And I'm just talking about the United States sales at the moment. Maybe NIO will own a larger market share in China. Maybe Tesla will own the market share in China. We don't know. But I can tell you this for a fact, that right now the EV space is out of control. And on top of it being out of control, Tesla is getting pushed up by a lot of traders, a lot of people who aren't in Tesla for the long term. You don't believe me? Look at this. Look at this drop here. Look at this drop. It dropped, what? Like 12% in like a couple hours? Guys, holy, that is insane. How does a company like Tesla drop 12% in a few hours, like just overnight? That is insane. That is absolutely ridiculous. And this doesn't even show the full drop. Like this dropped all the way to like 468 or something, or 568. Insane, guys. It's because there's massive volatility right here because no one knows what it's worth at the moment. And that's where I struggle to go ahead and keep this as a position, because when we were sitting down here at 400 a month ago and I traded that to like 500, 600, I was like, okay, that makes sense. But now the fact that it stayed at this 600s, like 630 level, that really scares me, because I do believe that after this gets inducted, that we're going to lose a lot of these gains. And I believe we're coming back down to probably a 550 level, because that's where this stock belongs. It belongs no more than a 550 stock at the moment. Like, in my opinion, this stock is probably worth 500 bucks. And next year at this time, maybe it'll be worth 800, 900, but that's what it should be worth. Maybe it'll double in the next year. I don't know. I can tell you this for a fact, though, that where it was sitting the other day up at like the 650s, that's inflated. I can tell you for a fact, it being in the 630s right now, that's inflated. And I can tell you for a fact that most of the money going into this, because of this volatility here, is traders. There aren't a lot of investors in Tesla at the moment. And I'll be honest, I sold out. I sold out around 600 and some change today. And I'm not angry about it. I'm not mad about it. I'm actually pretty happy with it, because the thing is, in my opinion, for me, this is now breaking rules of what I would buy, right? This, in my opinion, is so overvalued at the moment. In my opinion, at least 20 to 30% more than it should be, that I can't see myself owning it, okay? And if it goes up to 700 before it comes back down, that's fantastic. I hope they do the best. I hope Tesla, I hope the best for them, but this is not a company where I see it doubling in the next year. I could see maybe a time and a half. I could see maybe 1.8, whatever, but I cannot, this is not a company I can see doubling in the next year. With intrinsic value. I mean, doubling our EPS. I can't see them doubling that in a year. I just can't. I can see them doubling it in maybe 2 years, but I can't see that in a year. And I do believe there are other better opportunities at the moment. When it's at 450, when it's at 500, it's a buy for me, okay? But anything above like a 520, a 530, I'm not interested anymore in buying. And at a 600, 630, I'm not even interested in owning, to be honest. So anyways, that's pretty much my rant on Tesla. But Elon Musk put out this about reducing costs. And as I said before, that makes sense, because if they don't reduce costs, they will get destroyed. Like their next earnings report, when they come out and it's like, guys, we only made 80 cents and we just made $2 the last EPS. It's going to devastate the stock, devastate it, because now you don't have long-term investors in there. Now you got a bunch of traders in there too. And you got these trades. Look at that volatility, guys. It was like JP Morgan announced they like downgraded it by a couple dollars, and they're like, well, everybody sell out. Like it went nuts. It went absolutely insane today. It went insane. So what happens when they miss EPS and the entire industry downgrades them? As I said, destroyed. They're going to be down at a $400 level if that happens. And for me, it is not worth the risk at the moment. The risk is not, the reward is not worth the risk. That's how you put it, yeah. So that's pretty much it. Anyways, I want to talk about this stock, guys. I put in for a buy on Airbnb today. It didn't execute. It didn't. I put in for a buy at 95 or 100, something like that. I was hoping that I'd get it for around $100. I didn't. I'm not upset that I didn't. I mean, 144. That's way too much. That's too rich for me. So I'm gonna wait until this cools down to enter. My price target was 100 for it. If it falls down to a 90, I will be buying it. but at 100, I might ease a small position, but I'm not easing a big position at 100. That's rich. At 90, I'd be more willing to. At an 85 or an 80, I'd be willing to throw in a good chunk of money. Okay, but at this current evaluation, once again, I mean, it just IPO'd, so there's a ton of hype around the stock. And I thought we were going to have a little bit less. I thought DoorDash was going to have the majority of the hype, and it just Airbnb went nuts. Okay, let's go ahead and talk about another stock you could possibly throw in your portfolio right now, which is equally as overvalued, to be honest, as Tesla, but their growth is supposed to be insane. And the crazy part is, the worse the economy does, kind of almost the better this company does. Like it's weird, but and I think they're going to continue to do really well throughout this next year. Now, this is a company called Shopify. If you're not familiar with Shopify, basically what they do is they go ahead and make websites for e-commerce stores, for people building their own companies, for any of their own companies, and they have several different types of plans and everything else, but it's a subscription base, and everyone who pretty much signs up through Shopify, majority of those people end up being pretty happy because you can host your websites for pretty cheap with them. You can build it. It's an all-in-one platform, and for $80 a month, you and your small business, whatever that small business may be, you now have a website where you're on the World Wide Web. And websites in the pandemic right now are more important than they ever have been before. So now if you take a look at this, all right, you're going to notice the price to earnings is off the charts. Like, we're sitting at like 1,000, but I'm going to explain to you why this actually is not that bad. Okay. Now, obviously it's high, but when a company starts doing really, really well, when the growth is just absolutely insane and they start tearing up an entire industry, an entire market like crazy, you're bound to get some high priced earnings. And normally what'll end up happening is the company will start growing into those price to earnings. Okay. Meaning that this first time they profit, right? That's usually when the price to earnings goes nuts. And as you can see, $1.58 EPS, that's pretty good. That was a pretty good EPS for their first profitable quarter. And I see them going drastically up from here. It wouldn't surprise me if you saw this next EPS at like 220 or 240. And it wouldn't surprise me in the quarter after if you saw this closer to $3 or $4. Like, I could see this EPS getting to probably maybe $4.50 or $5 by the end of next year, just because of how insane Shopify's growth has been. On top of that, you have to understand, we just had Black Friday. We had basically the biggest sales of the year and Christmas and everything else. So e-commerce is going to shoot through the roof, right? So you're going to see some massive EPS on this next earnings report. I'm almost positive of it. And what's going to happen is, I believe that we're going to see a drastic shot up in the PE ratio, to be honest. We're sitting at like a 650 right now. And to be honest, for Shopify, that's not bad. That's really not bad, guys. I mean, I could see this stock running all the way to like $1,500 on the next EPS. If we hit like a 240, 250 EPS, I can see it hitting $1,500, $1,600. And I believe we have like a month until they report that. And I could be wrong there, but I think Shopify is going to be a really great buy. I think we're going to see a lot more growth in Shopify than Tesla short term. And on top of seeing a lot more growth short term, I believe that long term it's going to end up being a more profitable business, because at the end of the day, it's a software company, right? There aren't a ton of expenses to a software company. The most expense that they have is usually marketing. Okay. Now, where Tesla has real costs. Like there are tons of actual real costs involved. And that's where you could see Tesla struggle with their EPS, I think, for a little bit longer than a company like Shopify. And this isn't bagging on Tesla. I'm not coming at Tesla at all, or anyone who owns Tesla. I hope you do the best with Tesla. It's just at this point, I believe that Shopify will end up being a more profitable company short term. Long term, I do believe Tesla can probably get there, but at their current evaluation, I'm not a buyer, okay? And I'm not even a holder. At a 500 evaluation, $500, and a 450, when their valuation comes down quite a bit more, and they grow into those price to earnings a little bit, yeah, I'd be willing to do that. But I do believe this next quarter is going to be very, very weak. And for that reason alone, and the fact that through these last 2 quarters, we didn't add a lot of intrinsic value. We added a stock split and we added the S&P 500. Both are massive, absolutely massive spikes usually in the company's overall market cap. However, the value normally doesn't go up, meaning if you had $5 and let's say you owned a lamp, right? And that lamp was worth $5, okay? And 2 months from now, you're like, well, let me go ahead and buy that $5 lamp. No, it's no longer $5. Now it's $8. Well, I'll be back here in a couple days. You come back in a couple days and he goes, all right, I got the $8 for the lamp. And you're like, well, now the lamp's $10. Now it's a $10 lamp now. It didn't add any value. The lamp is exactly the same. They did not prove better earnings. They didn't prove any better profits. They didn't prove anything. All they did was get a bunch of hype, you know? And for that, it's just not the stock I want to be a part of at the moment. In my opinion, there's too many people buying into it, too many traders, too many short-term people who aren't in it for the long term. And I know it kind of sounds ironic because I sold, but at the same time, I'm an evaluation guy. If a stock makes sense to me, I will buy it. If a stock makes sense to me, I will hold it. But if a stock starts to get out of proportion, and there's a good chance for it to drop drastically within the next couple months, that drastic of a drop that Elon Musk has to literally email all of his employees, hey, stop spending money on stupid stuff. Don't break your pencils. Don't, you know what I mean? Don't, that worries me, okay? That really worries me. And for that reason, as I said, short term, I'm out. I'm out until they prove more to me, okay? Once they have proven more to me, then I will go ahead and be a buyer of Tesla again, like I was before. And I have no problem buying Tesla. And as I said, I hope they, I hope they do the best. I never bet against Elon, but in this case, I do believe we're going to see a big pullback. And I think that once you see a little bit of a pullback in the EV space and a little bit of weakness, you're going to see a massive pullback in a lot of different sections because you have a lot of traders throwing money into stuff they don't understand at the moment, into stuff that hasn't necessarily proven itself, into stuff that doesn't have actual value yet. They are ideas, okay? Like a lot of these companies are more or less ideas. They're not making money yet, right? So in my opinion, they're a business, but they're a business that at this point, without funding from the public, people like us, investors in the stock market, they would fail. Like Xpeng, probably fail. Neo, probably fail. Last year, they were looking at possibly running out of money. Like they were looking at possibly not being able to continue the operations of the company just because the fact that they didn't have enough funding to do so. Now they got it because they earned like 50 times what their value was last year, which is insane. 25 times, I think. I actually owned, rest in peace, I actually owned Neo at $2.30, and they made me mad in an earnings call when they were reporting that they were not interested anytime soon in being profitable, and that really bugged me. But I did own a bunch of Neo at one point, but anyways, that's for another conversation. That's pretty much it for this video. That's all I wanted to cover. But yeah, be very leery of this. And I do believe that we are going to see some weakness in Tesla here over the next couple months. Tesla has been downgraded by quite a few people here within the month because I do believe that they know. I believe economics were kind of, if they didn't get the hint, maybe someone said something to them and said, hey, look, we needed to drop this valuation down a little bit because we're struggling to hit that EPS. And if we don't hit it, obviously the stock's going to drop. It's going to tank. And they're probably very worried about it. And I would too, you know, I'd be very worried. That's why I'm currently out. But anyways, guys, that's pretty much all for this video. If you did go ahead, get some value out of this, or you got some insight into why I'm pulling out of Tesla, just go ahead, hit the like button. I'd really appreciate it. Hit the subscribe button for me and turn on your post notifications so you don't miss a post when I post it. And guys, until next time, see ya.